What is going on, my good old friends of YouTube? It is your boy Stas here. Welcome back to another video. So check it out. You guys know the deal. It's Sunday. We have a crazy week coming up in the markets with earnings. We got a lot of companies to break down in this video, and we got to go over the markets in general and kind of where my head is at and what I'm looking to do in these markets. But before we do all that good stuff, get your free money from Moomoo. Link down below. You get up to 5 stocks, and I think now that it's May 1st, I just got an email from Moomoo. They're doing a promo where you might be able to get a free share of Twitter, and you got a shot of getting potentially a free share of Amazon. So use that link down below, deposit at least $100, and boom, you get a bunch of free stocks, guys. And with that being said, cheers, happy May. Let's get right into the video. So at this point, you guys know the markets have been an absolute disaster, an absolute SHIT show. I can't cuss on YouTube, guys. Sometimes I wish I could. I wish I could just let loose, but you guys know how that goes. We can't let loose too much here on YouTube with the cuss words, right? But you know what's going on. It's been an absolute disaster in the stock market, right? Absolute freaking disaster. And on Friday, we hit a fresh low on SPY. We hit $411.21. And mind you, SPY on Friday alone went down almost 4%. Freaking bloodbath, right? And Triple Q, let's pop that up. Triple Q went down over 4% on Friday. It went down almost 4.5%, but the difference is this did not take the lows out from a couple of days prior to Friday, while SPY, like I just said, SPY just hit a fresh low. Triple Q is about $2-3 away from that 311, 312 low that it hit on the 26th of April. And if this trend continues, guys, which as of now, we are not seeing any signs of a reversal. We're still downtrending on the 20-day chart on Triple Q and on SPY. So if this trend continues, which I have a feeling it might, we might even take those lows out as soon as this week, maybe Monday, maybe Tuesday, because we're right there. We're right there on Triple Q. So you guys got to realize if we get a little bit more red, just like that, Triple Q's under 310, we take the lows out. And from that point, where could this be going, you may ask? That's a great question, because we can't see on the 4-hour chart where it could be going, because it's already at a low on the 4-hour chart. So let's pull back a little bit to the yearly chart. Well, you can't see where it's going on the yearly chart either, because Triple Q is at a year low at this point, 52-week low. So let's pull back to the 3-year chart, guys. And the 3-year chart shows you that Triple Q upcoming, some upcoming levels of support right around 295 to 300. That is where I'd say in the very short term, we might be going to if things get even worse. And that level was support about a year ago, early March of 2021. So about a year and 2 months ago, we held about 295, 300 before running all the way to about $410 a share. So that's the next main level of support. And I'm telling you guys, if Triple Q takes out or breaks under 295, 300, it might be going down to that 180 SMA on this 3-year chart faster than you think, which is right around 265, 270, which means that, that implies we might be going down another 10, 12%. Now, will we definitely go down another 10, 12%? Nobody can tell you with certainty what is going to happen in the stock market, right, guys? Nobody freaking knows. But if we actually, let's say, get into a recession, we just got GDP, negative GDP annualized for the first quarter, which is not good. If we get another quarter that's negative, we go into a recession, inflation keeps on running, just like that, we could go down another 5, 10%, and then lo and behold, just like that, we are going to be at that 180 SMA. It could happen sooner than you think, guys, so keep that in mind for Triple Q. And same thing with SPY. If I pull up SPY, take a look. If this thing breaks under, let's say 400, 405, which pretty much is the main support stemming back from a year ago in May 2021. If $400 gives, guys, or $400 gives, guys, if I can even speak today, right? This could end up going down between 350, 375. I mean, that's right by this 3-year 180 moving average. So I'm telling you guys, be mindful of that. Things could get worse. And I'm not trying to be a doomsdayer here. I'm not telling you guys to sell out. That's the last thing you want to do during a crash or correction. You do not want to sell out unless you have no other option. Let's say you have no money, no cash, you have bills, you have no other option. That's the only time where, okay, I get it. You might have to sell out at that point. But if you're able to ride out the storm, now's the worst time to sell. If anything, you should be nibbling on the way down, but I'm not telling you what to do. As always, I'm not a financial advisor, but in my opinion, and historically speaking here, this is a fact, selling in a down cycle, selling when the markets are crashing, it's just a bad idea. It's just a bad idea, right? So what do you guys think? Do you think we do go down another 5-10% in these markets? Drop me a comment down below. Or do you think we are at the bottom, or we're very dang close to the bottom? Let me know your thoughts in the comments. Smash that like button if you haven't done so already. And of course, make sure to subscribe if you haven't done that already either, because we're super close to 25,000 subscribers. And let's see if we can get there by the end of this week. I think we can. I think we can in the next couple of days. So make sure you guys subscribe if you haven't done so already. And with that being said, let's dive into the meat and potatoes of this video without wasting any more time. Let's break down some stocks that I'm looking at this week, all of which, guys, all of these stocks are reporting earnings. So we got to break down some estimates from the analysts and so forth. So let's get into it. This week we have AMD, Advanced Micro Devices, which went down 4.5% on Friday alone, and it's down about 50% from the $165 all-time high that was hit back in November of 2021. So this stock is heavily, deeply in a bear market right now, and they report earnings on the 3rd of this month. So not Monday, which is the 2nd of May, but Tuesday, which is the 3rd of May, they report on Tuesday, right? And their average revenue estimate, and all these average revenue estimates, guys, that we're going to talk about in this video, and average EPS estimates, I got these from Yahoo Finance, right? And no, Yahoo Finance does not sponsor this video, my content, nothing like that, but I just genuinely use Yahoo Finance, right? So that's where I got these estimates. The average revenue estimate for AMD for this quarter, and this is probably based on 20-30 analysts, give or take, $5.52 billion, which implies a 60% growth year over year. So that is extraordinary. If AMD pulls in 5.5 on the top line, that's 60% growth. That's pretty freaking impressive. And the average EPS estimate is right around, 91 cents, which means clearly that they are going to be profitable. Of course, if that EPS estimate is legitimate, if it actually comes in at 91 cents, which it should come in, give or take a couple pennies, right around that point. So AMD is going to be profitable on the quarter with 60% revenue growth. And of course, this 4-hour chart looks like dog crap. I mean, it's still downtrending under the moving averages, death cross, all that jazz, right? But if you pull back a little bit to the 3-year chart, you're like, okay, AMD still looks pretty dang good. And the sell-off from 165 to where we are now, well, quite frankly, it was needed, right? It was very, very much needed. And now we got it, and we'll see. We'll see anywhere from 70, 75, 80 bucks. That is where we might end up getting some buyers, myself included, guys, because if you're my Patreon, I post all my moves on Patreon, what I'm doing, and I let you guys, in on that. AMD is one that I used to own months and months and months ago. I used to own it before it ran up to 165. I owned it at 70, 75. Funny enough, that's kind of where we're getting to now again. So I used to own it. I sold out of it on the run up, and now it's come down to the point where I'm looking at it as a re-entry. So if this comes down, and mind you, I'm going to wait until after earnings to look at a re-entry point, because for me, guys, with short-term trades, I don't like buying before earnings and trying to gamble and speculate. So I'm going to just wait until they report. If the numbers are solid, even if it means I miss on a little bit of a run-up, I'm going to wait until after. If the numbers are solid, guidance, all that good stuff, I'm going to consider AMD very heavily now that it's come down a good chunk. So the next one is Airbnb. ABNB is the ticker. This went down 4% on Friday. Overall, it is down from all-time highs about 27%, so it's in a bear market. And they also report, like AMD, on Tuesday, and the average revenue estimate for Airbnb is $1.45 billion, 63% growth year over year expected if they do $1.45 billion, guys, and the average EPS estimate is negative 28 cents. So like expected, they're not going to be profitable, and I'm not surprised because this company is still growing, obviously, 63% year over year growth on top line if they do $1.45 billion in revenue. So companies that are growing that quickly oftentimes are unprofitable, right? In this case, Airbnb, it looks like they did have profit the past 2 quarters, but they're all over the place, right? They're not consistently profitable quite yet. And based on this chart, I mean, if they drop the ball on earnings, guys, they're already under the moving averages towards the top of the channel, downtrending channel at that on this 4-hour. If they drop the ball on earnings, guys, guidance maybe comes in soft. I don't freaking know. If people are traveling less, if we're in a recession, and obviously all this inflation that we're seeing, people's dollars aren't going as far as they used to, this could end up dumping under 150. And if it goes under 150, guys, we take the lows out from last week, this could be a short opportunity, honestly. This could very well be an opportunity where you can short the stock, maybe buy some puts, do whatever. And if it comes down to the bottom of this channel, anywhere from 120, 130, that is where I'd consider going long on Airbnb. But we're not there quite yet, not even close. So for me, guys, I'm not too in love with this setup whatsoever to go long on it. So for that reason, it's on my watch list. And we're just gonna be watching it, right? We're just gonna be seeing what it does after earnings. Starbucks is another one that's just been completely and utterly thrashed. I mean, I don't know what else to say about Starbucks. This stock has gotten destroyed, and this is another one like AMD where I used to own it. I sold out of it for a nice chunky profit, and now it's come down to where I used to own it. It's funny how things work, guys, and if you trade in and out, it's funny how you can pick up stocks where you used to own them a year or two ago, and you can then ride them back up if they do end up reversing. So I used to own Starbucks at about 70, 75. I think I sold it at about $1.15, 115, 120 bucks, something like that. And now it's back to 75. So if this thing finds support anywhere from 70 to 75, if it breaks under 70, it goes to 60, 65, that is where I'm going to be looking at Starbucks. And it might even be, I don't know what the valuation is. I got to do a little analysis there on my own time. But it might even be a good opportunity for a long-term investment. So they have earnings on the 3rd of May on Tuesday. Average revenue estimate is looking to be around $7.6 billion. Average EPS estimate around 59 cents. So I'm not seeing anything in terms of what the last year revenue or EPS estimate was. So I'm not sure if they're growing year over year or not. I'm assuming they'd grow revenue, or rather they are growing revenue a little bit year over year, nothing crazy. But overall, Starbucks on the 3-year chart, it's come down a good chunk. Let's see here, percentage-wise, about 40%, which is nuts. They're going through the ringer in China. They're struggling a lot there, and the stock is really just getting massacred. So we're going to be watching it again, like with AMD, Airbnb. I'm not going to buy this before earnings. I'm just going to wait after earnings, be patient with it, and kind of see what it does from there. Etsy is another one, ETSY is the ticker. They report on the 4th, which is on Wednesday, and they're looking to do revenue of $575 million. That's the average here from Yahoo Finance, which is up not much year over year, 8.6% year over year. So growth is really slowing down on Etsy, and the stock is it's already pricing it in. The stock's down 70% from that $300 all-time high, or was that even an all-time high? Let's see the 3-year chart. Yeah, it was $307 was the all-time high from the middle of November, and again we're down about 70% from that point, which is pretty insane. So revenue growth is expected to grow, or rather, it's still going to grow, but it has slowed down a good chunk from where it was growing, during the pandemic, peaks of the pandemic, and so forth, which is expected. And let's see the 3-year chart on Etsy. Let's go back to that. That's not good. It looks like it collapsed, this past week or two under the 180 SMA and under $100 a share. So this is a falling knife. We got to be careful, and maybe earnings turn things around. We have no idea. We'll see what ends up happening. Shopify is another one. Earnings on the 5th, which is on Thursday. Average revenue estimate of $1.6 billion. And EPS estimate for Shopify is right around 99 cents. So like Etsy, Shopify is going through the ringer right now. It's getting destroyed. Growth is slowing down. This stock's down 75% from all-time highs, which is unbelievable. Deeply in a bear market, right? Growth is slowing down. So Shopify at this point, if they drop the ball, don't be surprised if they go down even lower. It's possible with all these stocks. Etsy as well. These two, Etsy and Shop, these were pandemic stocks, right? These were companies that did very well during the pandemic, and now that we're kind of seeing the growth slow down, we're getting out of the pandemic. Again, these stocks are going through the ringer. These companies are getting hit. They could go lower. They can go lower. And if I pull back a bit to the 3-year chart on Shopify, this one, just like Etsy, is under both moving averages on this time frame, which is not good. And we're actually approaching the levels. Funny enough, guys, look at this. Shopify is approaching the levels that it was in, or that it was at rather, during the March 2020 crash, where we got down to about $325 to about $350 per share. So that's crazy. I mean, geez, they're getting hit. And did they announce a split, guys? I guess they announced a split. Shopify did. Oh, wow. I didn't even realize that. Or maybe we talked about it and I completely forgot about it. But looks like they are doing a 10-for-1 split on the 28th of June, which is about 2 months away from when I'm filming this. Did you guys know about that? I feel like I might have forgot about it, but now that I'm thinking about it, I don't even think I knew about that. But either way, guys, watch out for that growth to slow down. That's kind of what we're expecting here, and of course, the stock's already pricing it in, and watch out for that split, which is going to come into fruition in the next couple of weeks, which for Shopify, I don't even think they have to split anymore. Maybe when they were almost $2,000 a share, at that point they had to do a stock split, but now that they're almost at 400, they'll probably go into the 300s. I don't know why they're splitting, but hey, nonetheless, they're splitting. And of course, my opinion to Shopify, it means nothing, right, guys? It means absolutely nothing. So let's talk about the next one. Square, also known as Block Inc., is reporting this week, guys. The stock went down 5% on Friday, and overall, you guys know it is down a lot. It is down 60 to 65% from all-time highs, and when it comes to their earnings, they're on the 5th. So what is that? On Thursday, right? Yeah, Thursday is the 5th of May. Their EPS estimate is right around 21 cents, which is a profitable quarter for Square, and their average revenue estimate is $4.14 billion, which I'm not sure what the growth rate is on that year over year, but I'm assuming, like Shopify, like Etsy, Square being a pandemic stock, it did very well. I feel like their growth obviously is going to be slowing down a little bit. It's not going to be negative growth. I have to look at the numbers, but I doubt it's going to be negative growth. But the growth rate is going to be coming down a good chunk, and this is right around, where is it, $100 a share. And believe it or not, this is above the lows from recently. It's about 25% off the lows. Those lows were at about $80. We hit that in the end of February. So if we see Square get any closer to the $80 low, we take that low out. At that point, it might become interesting. But where it is now at about $100, I still think it might be a little bit lofty. I'm not going to lie to you guys. Even though it's come down about 65%, this is not a screaming buy to me quite yet. And that's the thing you have to realize. In the markets, if stocks go down 70%, it doesn't mean it's a buy automatically. They could always go down lower, and a lot of the time, stocks that go down a lot, they do go lower. They do go lower than you think they're going to go. So I'm not saying that's going to happen necessarily to Square, but I'm just trying to be real with you all in terms of the stock market in general, right? So we have Square this week on the 5th. Watch out for that one. Another one I'm looking at, guys, is good old Estee Lauder, ticker symbol EL. They report on the 3rd, and if you guys look on the 3-year chart, this looks pretty dang good. It got very overbought at 375. Now it's at 265. It is down about 30%. It's in a bear market. And by the looks of it, as of now, guys, Estee Lauder is holding the uptrend above this 180 SMA on this 3-year chart. And they do report earnings again on Tuesday with average revenue estimates of $4.31 billion, with EPS being around $1.67. So if Estee Lauder reports good numbers, guidance is strong, this might start bouncing. I mean, this uptrend on the 3-year chart could continue, and we might be pushing 300 again. No doubt about it, and I'm going to be watching it for that reason. Datadog, DDOG, is another one, guys, which went down 6% on Friday. It is down about 38-40% from that recent almost $200 high back in November, right? So it's down a lot. It's in a bear market, and their average revenue estimate is looking to be around $337 million. And mind you, they report on the 5th, which is on, what is that, Thursday, right? And their average revenue is, again, $337 million, which is up 70% year over year. That's a lot. That's a lot of growth, guys. And their EPS is coming in at about, on average, 11 cents, which means they're going to be pulling in a profit yet again. And it does seem like Datadog has been profitable over the past many quarters based on what I am seeing here. So let's watch out for this one. It's growing crazy. The stock's down a lot. We're approaching a big, level of support at about 115 to 120. If we do show a bounce off of here, maybe we will get some green. But let's not kid ourselves, guys. We're under the moving averages. We have a death cross. We're not getting the bounce yet. In fact, we went down on Friday 6%. So this could get lower. This could go lower. So be mindful of that. On Friday this week, we have Draftkings, which is one of my spec positions, and I've been open about it. I am down a crap ton on Draftkings, guys. Probably my average is $34-35. Being honest, now it's at 13. Whatever the math is, what am I down? 60-70%, or maybe not 70. 70 is a little extreme. But whatever that is, 50-60%. I am down, well, more than 50, 60, something like that. I'm getting destroyed on DraftKings. But the beautiful thing is, guys, like I always say on my channel, whenever I take a speculative position, I don't put much money in whatsoever. I put an amount of money in that I'm willing to lose, and there we go. Boom. I just let it ride, and that's where we are. I'm down 60% on DraftKings. I'm letting it ride, and quite honestly, I could care less. I could care less. DraftKings is down a lot. I am going to be just all right, because if this turns around, who knows? I mean, it's $13 a share. If this rips to $70 a share in 5 years, I'll be all right, just like that. I made money. Or even in 3 years, it's definitely possible. So they report on Friday, average revenue estimate of $414 million, up 32% year over year. Average EPS, negative $1.16. So like we expected, like everybody's expecting, DraftKings is going to lose money on the quarter. We all know these companies, gambling companies, gaming, casino, online casino, whatever you want to call it, sports betting, they are spending a lot of money on marketing to acquire users, to then try and keep those users for life, and then increase the revenue, average revenue per user, right? That is kind of the model in a nutshell. Of course, there's more to it than that, but that is the model in a nutshell. Get these users to stay on your platform and increase the average revenue per user over time. So this stock is down. Let's see what I want to see what it's down from all-time highs. I mean, geez, I'm down 60%. What if you bought this at 75, you'd be down dang near 85%, which is just unbelievable. So DraftKings is one worth watching. They're looking to do about 30% revenue growth year over year, which I'll be honest is not extraordinarily impressive, but still they are growing 30+%, which solid for a company of that size. I think the market cap now is about a 4 or 5 billion market cap, something like that. So DraftKings, watch out for it. And the last one for this video, if you all stuck till the end, hit that like button. Make sure to subscribe and let me know in the comments that you stuck till the end. I appreciate all of you guys as always. Expedia, this is going to be one worth watching, kind of like Airbnb, to see where the sentiment is from the consumer. Are people traveling? Are the numbers beating? Is the guidance strong? That's kind of what I'm looking at Expedia for, right? And based on this chart, the chart doesn't look that bad. It's in a wedge. We're holding higher lows, making lower highs at the same time. We're a little bit under the moving averages, which isn't that great. But if we do get a bounce above 170, 175, we start making a move towards 190, and just like that, we break 190. This could end up being a breakout play. You know, it might be a long position at that point for me. So we have earnings coming up on the 2nd, which is actually tomorrow on Monday, and they might report in the morning. No, after market. And funny enough, their average revenue estimate is $2.23 billion, which is up 80% year over year. That's the highest growth number we have here out of the ones that we do have. Again, some of these companies we talked about, we do not have their revenue from last year, so we don't know how much they're growing for a couple of them year over year. But out of the ones we do have their revenue, this is growing the most if they do hit $2.23 billion. Again, up almost 80% year over year, but they are losing money. They are expected to do a loss or post a loss of negative 55 cents, or a loss of 55 or 59 cents rather. So a lot of revenue growth, but they are going to be losing for the quarter based on these estimates. And they did actually have a profit last quarter and the quarter before that. So that's going to be interesting, guys. I want to see again the sentiment around this company, earnings, and kind of where the guidance is. And we have a lot more companies we could talk about today, guys, but we're already about 27 minutes in. Holy crap, we got to wrap this video up. We have Under Armour also this week, ConocoPhillips, RCL, Royal Caribbean, MRO, BP, Pfizer. Those are some additional ones that we could talk about, but I don't want to waste or spend rather too much time. We're not wasting time, spending too much time. So yeah, I guess that is a good time or a good spot to wrap the video up, guys. So if you all enjoyed it, again, hit the like button, subscribe, drop me a comment, join my Patreon if you want to check it out, try it out. First of the month is right now. It's the best time to check it out, as I do almost knock over my laptop there. So check it out if you want all my moves in the markets, morning videos, more access to me. That's linked down below. And don't forget to get your free money from Moomoo up to 5 stocks, and you get a shot at a Twitter share, maybe some Amazon. Use that link down below, deposit at least $100, and boom, you get up to 5 stocks, each up to $3,500, and Twitter, and you get a shot at the other one. So use that link. I'll catch you guys in the next video. Thanks for watching. Peace out.